Welcome everyone to Mortgage Monday. Today on the President's Day holiday. Thank you for calling in. Can anybody on the line just can I hear their voice just to be sure that you guys are there? Okay. Our topic today is mortgage interest rate locks. And what is a mortgage rate lock? A mortgage rate lock is an agreement between a borrower and a lender that allows the borrower to lock in the prevailing market interest rate on a mortgage over a specified time period while the loan is being processed. When the lender makes this agreement, they are also promising the secondary market to deliver a loan at a specific price. The lender is subject to a monetary cost if they do not deliver it by the end of the time period. The rate lock protects the borrower from rate fluctuations for the duration of the lock period while the mortgage is in process. It guarantees that the lender will offer the borrower a specific combination of interest rate and points. If market rates rise after the rate is locked, the borrower will still get the lower rate to the lender's detriment. If rates fall after the rate is locked, the borrower might not be able to take advantage of the lower rate unless they pay a float down or a relock fee. What are the time periods offered for locking? Also essential to the rate lock is a time period, typically 10, 15, 30, 45, or 60 days. The end of this time period is the expiration date. If the loan does not close before the rate lock expires, the lender will offer an extension to the lock period at a cost to the borrower. Typically, the extension fee is 1/8% of the loan amount for every week needed to extend. Lenders will try very hard to not let the rate lock expire and may consider negotiating the lock extension fees if the rates have dropped since the time of the lock. Borrowers do not want to let the lock expire either, especially if the market rates have gone up since the time of their lock. Some lenders will offer a long-term lock from 90 days up to 2 years out. In this case, the borrower is paying a large non-refundable fee, as much as 1% of the loan amount, to purchase an interest rate that they believe will be lower than the actual market rates offered in 2 years. This is often pure speculation, and as a result, not many lenders offer locks over 90 days. New construction projects where borrowers enter into purchase contracts for homes that won't be complete for 4 to 9 months and sometimes longer are where you may find loan programs with long-term locks. They provide an option for the borrower who is watching long-term interest rates closely, but it will come at a cost. Sometimes developers will entice buyers and offer a seller credit to pay for the long-term lock fee for the borrower in a market where rates are expected to rise. This has been a very effective marketing tool for them. So how much does a rate lock cost? Borrowers are often told there's no charge for a rate lock. That's true in the sense that the rate lock isn't associated with a specific fee, but a rate lock isn't free. Rather, a longer rate lock typically involves a higher interest rate or fee added to the points, which is more expensive for the borrower. The interest rate or pricing difference between a 15-day rate lock and a 60-day rate lock might be as little as 1/8 or as much as 1/2 of a percentage point. When can interest rates be locked? Lenders vary widely when their rates can be locked. Some lenders will allow a lock at the time of a complete application is received from the borrower and a property is identified. Others will allow it once the conditional loan approval is given, and others when the appraisal is complete. All lenders try to minimize the possibility of unforeseen delays to the loan process that could result in lock extension fees assessed to the borrower. Therefore, to avoid a bad customer experience in such cases, some lenders will not allow a rate lock until the majority of the loan process is complete. When the locks are made after most of the loan is processed, the lock periods tend to be the shortest and the rates the lowest available. What happens when there's a delay to the loan process that isn't the borrower's fault, but causes them to have to pay rate lock extension fees? Well, sometimes, after locking in the interest rate, unforeseen circumstances arise that cause the loan process to be delayed, such as the appraisal report reflects repairs that need to be done before closing, or the title report reflects issues that must be corrected, or the seller needs to extend the closing date for whatever reason. Although these are not the borrower's fault, the borrower is subject to the lock extension fees if needed. However, if negotiated, the extension fee can be paid by the seller or the source of the cause. Perhaps it is escrow. I have in the past gotten escrow companies to pay for borrowers' extension fees because of delays that they have made. Of course, a seller can be, we can negotiate with the seller to pay for extension fees for the rate lock. In all cases, an addendum to the contract would be required. So everyone, this topic is a pretty straightforward one. That's all I have for you today. I'd like to open it up for questions and answer Q&A session, actually, if anyone has any questions. If not, this will be posted to the internet, and this cheat sheet will be available for your use also, if you'd like. Are there any questions? No questions? Lastly, I would like to remind everyone who attended to please consider me in your top 2 or 3 list of lenders. And if you haven't, please sign up for the VIP agent program. This program will benefit you in, well, I guarantee you, 24-hour loan pre-approval, calls returned within an hour, weekly loan status updates, and handwritten thank you cards to the borrower, the seller, to yourself after closing, among other things, as well as purchase promotions offered to your borrowers that could save them money. And currently, if you haven't heard, we are offering a $500 gift card to applicants that close before the end of February. So that is coming to an end soon, but I will be announcing a new purchase promo very soon. So I'd like to thank you for calling in today. If you have any questions regarding any matter, please feel free to contact me, cell phone, email, or text. I'm available 24/7. Aloha, everyone.